Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin plunges to $63,800 and Ethereum crashes below $1,900 as geopolitical tensions send shockwaves through crypto markets. Major liquidations and institutional moves dominate the headlines. Cryptocurrency markets experience severe turmoil following coordinated US and Israeli military strikes on Iran. Bitcoin dropped sharply from around $69,000 earlier in the week to approximately $63,800, erasing most of its recent recovery. Ethereum fell even harder, declining over 9% to around $1,864. XRP also tumbled to roughly $1.29 as risk-off sentiment swept through global markets. The selling pressure triggered massive forced liquidations across derivatives exchanges. Over $522 million in positions were wiped out, with approximately 88% coming from long positions. More than 150,000 traders saw their leverage bets forcibly closed as volatility spiked. Bitcoin funding rates plunged to negative 6%, the second lowest level in 3 months, indicating aggressive short positioning and extreme bearish sentiment among traders. Iran retaliated with missile and drone strikes targeting US bases in Bahrain, Qatar, and the UAE, as well as Israeli territory. Explosions were reported across the region, including Dubai and Kuwait. President Trump confirmed major combat operations targeting Iranian missile facilities, naval assets, and nuclear infrastructure. The escalation represents the broadest Middle Eastern military conflict in decades and has markets bracing for further downside when traditional exchanges reopen. Despite the chaos, major financial institutions continue expanding their crypto infrastructure. Morgan Stanley filed for a new national trust bank charter with the Office of the Comptroller of the Currency to offer crypto custody, trading, and staking services. The bank plans to launch a self-custodial digital wallet and has already recommended up to 4% Bitcoin allocation for high-growth client portfolios. Meanwhile, Barclays is consulting with technology providers to develop a blockchain-based settlement platform for payments and deposits, potentially including stablecoins and tokenized assets. On the security front, the XRP Ledger narrowly avoided disaster when an AI tool discovered a critical vulnerability in a pending batch amendment. The flaw could have allowed attackers to drain any account without accessing private keys by exploiting signature validation logic. Developers immediately halted the amendment and released an emergency patch. The incident highlights both the value of AI-assisted security audits and the risks of expanding blockchain feature sets. Looking ahead, technical indicators suggest Bitcoin could test the psychologically important $60,000 level if current support fails to hold. However, spot Bitcoin ETFs showed renewed strength with over $1 billion in inflows across 3 days this week, suggesting institutional buyers may be viewing the dip as an opportunity. The next major economic data releases in March, including jobs reports and inflation figures, will likely determine whether markets can stabilize or face further pressure. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.